it's just a phenomenal thing. If you really look deeply at it, you'll understand what I'm saying. If you're a judgmental hater, then you're on the side of, oh my God, these people are causing foreclosures, when foreclosures are happening either way.
Are you trying to figure out if Sub2 is a scam? Well, my name's Justin Pickell, aka Pickle, and I've completed close to 200 real estate transactions, mainly wholesaling. I'm here with my dad, who thought Sub2 was a scam before I was getting into real estate. Can you tell us why you thought it was a scam?
I never thought it was a scam. Let's get that straight.
Okay.
We were told in the mortgage business and in realtor school that to completely avoid due on sale and acceleration clause deals, you cannot take over people's mortgages or buy properties that are financed under someone else's name.
Okay. So with that clause for being due on sale, when does that typically happen, and why did that scare you so much to not do any transactions like that?
It's more so that you're just kind of listening to the so-called powers that be that don't want deals, don't want loans to be called, and they're scared of that. So if you understand it at a deeper level and you really think things through, now that Pace Morby has 400 million in sub-twos and a bunch of other people do across America, then you begin to understand that you can do them, that they're legal based on the IRS book. As long as you're making the payments, 99% of the time the bank does not give a shit if whose name the deed's in. So
okay. So, but before you even knew who Pace Morby was, you accidentally did a Sub2 transaction, right? So
yeah, it wasn't accidentally. It was more so that I liked the house. I got it for $5,000 down. I knew the guy had a mortgage. I wasn't scared of it. I was already a creative realtor, somewhat of a creative investor. I had got into flips in 15, 16, and had gotten into wholesaling in 19, but I was still 2018, I did it because I wasn't worried about it. I just knew as long as that guy made his payments, I wasn't making the payments direct like a typical Sub2. I had what's called a land contract, also known as an executory contract or a contract for deed. So that's what I had. And then I sold the property. First I rented it for 6 months to an insurance claim, and I made about $1,500 a month there. Then I sold the property with $20,000 down and made another $15,000. I signed over the mortgage to him. I assigned the land contract. My one mistake, which is dumb on my part, is I also deeded the property to the person that I assigned it to, which I legally didn't have the right to because I didn't own the deed. But I've done so many land contracts, I wasn't thinking that the deed's usually in escrow or with the seller, so I deeded it to him, no problem. We worked it out. We deeded it back to the actual owner. He got the land contract with the new person. They paid him and they ended up refinancing him out. So I just didn't have fear of the bank where most people did, but I also didn't have the vision or the courage or the wherewithal that Pace did to create a community behind it, to do a boatload of them, and to create a whole investment portfolio right behind something that we were told that is forbidden and should never be done, because the boogeyman, the acceleration due on sale clause, is coming to get you. There's ways with smart attorneys, if they do call it, to also get around it.
Which is the land contract, actually. That is the solution.
That is one of the main solutions. The land trust is another, and you got to pay for the others. Just kidding. Yeah, those are two of the main solutions. So Pace came in with phenomenal courage and just really got in a rhythm of doing it over and over and over. They were easier deals. And then there's a lot of judgmental a-holes out there that think, whoa, this guy's getting over, or how many people are in foreclosure. What they need to understand is Sub2 is about paying. A lot of times people are behind on their payments, or they're moving, or whatever reason they need to sell on a subject to. So let's say, based on Pace, there's been a million other subject to deals across our nation that have been sold, and maybe 200,000 to 300,000 of them went into foreclosure, who are all now pointing the finger at Pace or anybody else that created Sub2. But you have to understand, even the million customers that go to Quicken Loans or Rocket Mortgage, United Wholesale Mortgage, they fall into foreclosure. They might have a 3% interest rate. So my point is, instead of focusing on the ones that fell out, why don't you focus on the 700,000 people that are still getting good credit, and these other people that have new houses that are living in, whether homeowners or investors. Focus on that, on how this courage created a movement of homeowners in America living in happy homes and investors making money on deals that they didn't have to get financed. And it's just a phenomenal thing. If you really look deeply at it, you'll understand what I'm saying. If you're a judgmental hater, then you're on the side of, oh my God, these people are causing foreclosures, when foreclosures are happening either way. We're going to focus on all the people we helped, and we can't help everybody. We're not God to make everything perfect, but we do the best within ourselves and using God powers to help people and help ourselves and help one another. What else, Justin?
So how would people actually start finding these Sub2 deals and getting a grip of understanding how to talk to their clients about subject to? The first transaction you explained was all land contract. So now, since I got started into real estate about 3 years ago, you started picking up a lot more on how Sub2 transactions actually work, because we're part of the greatest community that's been able to help us not only through PACE, but the other people involved in the community who want to do deals.
Absolutely amazing overall.
So how do they get deals?
Okay, so how you get deals, just keep in mind, Sub2 is paying. Usually there's people in foreclosure. You got to talk to agents. You can talk to sellers. Whatever pain you're able to discover, that's what you're looking for. If you're looking for seller finance deals, that's usually about gain. They'll usually want maybe a slightly higher interest rate, maybe a slightly higher down payment, or you might get 0 down, 0 interest. If you know how to negotiate, maybe pay them a little more and explain to them why this is best for them for tax purposes, and that they have a really good, sound investor that's gonna balance the books and let them enjoy retirement life or whatever their desires are.
Yeah, so that's why we have to find those little details to be able to find that pain and truly help them. So whether it was a seller or an agent, like, let's start with the seller. Like, how would you decide it's a good fit to start approaching them about a Sub2 rather than a cash offer?
Well, in most cases, there's not much equity or no equity or upside down equity. So that's also the combination aspect of the pain, because they can't sell it on the market and pay realtors 6% and the other closing fees, and then they have to come to the closing with 20 to 30,000. So we've provided the solution to help these sellers out of these situations, change the world one deal at a time.
Yeah, so that one sounds like a low equity situation, but it could definitely fit in with some other pains like pre-foreclosures, probates, divorces. If they need to sell fast, it could be a combination of different factors.
Absolutely, and even you've had people I've seen, because I saw you do 45 out of your first 50 deals on your own, and the majority of those were Sub2, 27 of them to one buyer who got a lot of good deals, and we're going to talk about him at another time, but anyways.
Yeah, you can watch this video here to learn more about that story.